But Stephanie, you have been on top of this story all weekend long, chasing down every last detail. What do we know?
The weather was hot in New York, but the Knight Capital story was hotter. We know Knight's financing deal is done, and the company it seems that they're going to resume operations immediately. They have announced that they completed their refinancing in a statement this morning, but as always, there is a catch. What's that catch? Well, they are taking on 3 additional partners to their board. The likelihood that those partners are part of the investing group is a high probability, and that's not necessarily a positive for Tom Joyce and Knight Capital. Remember, this injection dilutes the shares of current shareholders, so Knight employees, how are they feeling today? A little bit-ish. Yes, they have a job to go to today, but the stock that they have is severely diluted. We also learned that of this investing group, which includes Blackstone, it includes Jefferies, they went with who they knew: GetGo, Stifel Nicolaus, TD. Knight had many, many suitors, as many as potentially 80, but they didn't go with distressed funds. They went with organizations that they knew very well. Jefferies, who provided their rescue financing, their credit line, which they needed to pay Goldman Sachs today, well, they also got to arrange the deal. Must be nice to be part of the deal. Christine, you've been working on this all weekend long. What's your biggest takeaway?
Well, I just think it's fascinating that it's Jefferies. I mean, here's a Wall Street firm that doesn't have the backing of the Fed, that's not a bank, that's been out there on its own, you know, raising capital from investors. A lot of people had doubts about it when MF Global failed, that they could survive. But they're able to come in here and show not only can we survive, but we can be a rescuer to another firm like ourselves that can't go to the Fed whenever they get in trouble.
Now, Brad Hintz compares this to like a Bear Stearns situation, where if you're a creditor, if you're a debt holder, you're in good shape. The firm's intact. Whereas if you are an equity holder, you're so out of luck. Take a look what Brad had to say.
What we have here is we have another Bear Stearns, right? We have a company that was saved at the cost of its stockholder base. Creditors were okay. The franchise will be okay. Their internalization business will be saved.
I want to talk a little bit more about this investment group. Christine, of all the people you spoke to this weekend, were you surprised that it was this 4 or 6? And there were so many groups who said they wanted in and couldn't even get a call back from Knight. Doesn't that surprise you, seeing that just a few days ago this company was barely breathing?
Well, we see that it's a lot of firms that do business with Knight. So you've got TD Ameritrade, you've got Stifel Nicolaus. These are equities brokers that need to have an intermediary like Knight, and they like having Knight out there and not having to rely on all the other big firms.
So, but what's the incentive for them to want to bail out Knight specifically? There are other choices. Knight isn't the only firm in the business. They could have just started doing business with somebody else,
right,
and waited until time marched on and perhaps another firm came in to fill the void that Knight created.
Well, nobody wants it to get too consolidated. They don't want all of the business to go to the Goldmans and the Credit Suisses. They want to have options, and so Knight is out there. It's an option. Also, obviously, these firms get to come in and get to be investors, maybe get to have board seats, get to have more say on how Knight does its business. So it remains to be seen how that plays out for them.
The more people I talk to, they feel like for the Blackstones and Jefferies of the world, this is a sweetheart deal. Remember, they needed to get the money today. Even if they got short-term financing, they would have kept them in business for another couple of days. Eric, imagine if you're a Knight Capital counterparty. Were you really going to call them up today and trade your AT&T stock through them? No way.
No.
Even if they were breathing, they needed to announce a deal last night or today to really keep the machine going.
But that's where risk-taking comes into play. I mean, the Blackstones, the Jefferies are in there saying, we're going to take a risk. You know, it remains to be seen what really happens tonight. We might be having a different conversation in a week or so. So, I mean, they're taking a risk. They're putting their capital at work. And, you know, maybe they'll get a reward for that.
Do you think the comparisons being made between this and the J.P. Morgan bailout of Bear Stearns are in any way,
yeah,
are they fair?
Yeah,
are there parallels to be drawn here?
I think there's a parallel in the sense, as Brad says, that, you know, creditors look like they'll be okay, but who knows, maybe not, right? It's not a guarantee. It's not like being taken over by J.P. Morgan. The other important thing is that J.P. Morgan was only willing to do that deal if they got indemnity, basically, from the Federal Reserve for $30 billion of assets. I mean,
no such deal here.
These guys have no comfort. They could lose everything. So, I mean, you know, if they make some money, that's part of what risk-taking is about.
Eric, you also have to bear in mind Blackstone, Jefferies, Stifel, they wanted extra juice in here because they had a very abbreviated due diligence. At most, they had 3, maybe 4 days. In a normal course of action, you'd have much more time than that. And even though there are sort of bitter Betty hedge funds out there saying, well, we would have offered Knight a better deal, let's be honest. A distressed hedge fund that doesn't necessarily know Knight's business, were they really going to make that decision within a day and say, boom, here's a blank check? Highly unlikely.
They were in control, right? That's why Knight had to apply for a waiver from the New York Stock Exchange, right? Otherwise, in a situation like this, when shareholders are being 73% diluted, they would expect to have a say in the matter, but not this time.
Right. I mean, one thing that's interesting is to structure it as a convertible when they don't even want to wait 2 days to convert it. Why not just make it a straight stock offering? I'm sure there's a legal explanation, but, you know, that's sort of an interesting wrinkle to it.
I think it'll be interesting to find out over days how Knight employees feel. When we look at this, Brad Hintz earlier today said Tom Joyce is a hero. I wonder how Knight employees feel. The last salesman I spoke to this morning, he said the word, not even a word, ish. I'm feeling ish. I have a job, it's secure, but look at my stock. And it's not like you can hop and go work somewhere else, because if you go work somewhere else and they pay you out, they pay you at this severely diluted level.
But you guys led the hour by talking about Bill Cohen's column, and I mean, talk about incentives, okay? Do you think Knight now has an incentive to get their trading software right? Do you think they're going to start really valuing their software engineers? I would think so.
I think everybody else on the street has an incentive to get his software right.
I would think everybody who's just invested in this company is making darn sure that they have the very top talent making sure the software is right. And so do all the other employees, even the people not in the software. They now understand the importance of these software guys.
But if you were a cynic, who's on the hook here, right? Who's really in trouble? Some software guy, some glitch. The rest of Knight Capital that had nothing to do with this snafu is they're suffering. Tom Joyce kind of looks like a hero here. Who's actually on the hook?
No, but the lesson for all the employees at Knight is actually without good software, they don't really have a company, right?
It's a great point.
Christine,
okay.
as always, thank you for joining us. Lots to talk.